Chinese individual stocks, New Oriental, TAL Education, scrapped earnings report released, media appeal in the regulatory storm. New Oriental Education and TAL Education, two of China's largest tutoring services providers, have cancelled their upcoming earnings releases and media calls amid Beijing's intensified crackdown on off-campus tutoring. The companies separately announced the cancellations on Friday, citing recent regulatory developments as the reason, without further elaborating. New Oriental Education and TAL Education's earnings announcements were scheduled for August 3 and August 5 respectively. Both added that they would provide further updates at an appropriate time in the future. China's off-campus tutoring industry has been in turmoil since the country's state council announced a crackdown on the private tutoring industry last weekend, banning holiday and weekend tutoring and blocking the establishment of new tutoring centers. In addition, companies that operate edtech platforms, or services that provide online education, will no longer be allowed to raise capital through initial public offering. China reins back tutoring in education reform that sets off stocks rout. The number of institutions operating in China's private tutoring industry now almost equal the number of public schools in the country, China's Ministry of Education said at a press conference explaining the new policy. The ministry warned that if the private tutoring industry was allowed to develop unchecked, it would form another education system outside the national education system, and this could disturb the normal order of public schools. It also said that the industry has been overcapitalized, which has led to excess publicity that has peddled anxiety among citizens and defied the public welfare nature of education. The tutoring industry overhaul triggered a plunge among Chinese edtech stocks listed in New York and Hong Kong, with reports of large-scale layoffs in the industry. It also prompted concerns that it could lead to a black market for private tutoring with even higher prices. Among the hardest hit, New Oriental stock has fallen nearly 50% compared to a month ago, before the policy documents started circulating online, while TAL shares have dropped nearly 20%. Gaotu, formerly known as GSX Techedu, is down more than 10%. The listed education firms, such as New Oriental Education, TAL Education and Gaotu Techedu, may well need to shut down the majority of their business to comply, Gavco analyst Ernan Shui wrote in a research note this week. They may not necessarily have to delist, but they will only survive with dramatic changes in their business model. Jenny Tsai, an analyst at U.S. research firm Morningstar, previously told that they expect both New Oriental and TAL to invest in non-academic tutoring such as art, computer coding, sport, music, and other extracurricular programs to comply with the new rules and remain listed.